Good morning, everybody. How you guys doing? I'm doing all right. I'm a little hungover, but other than that, hanging in there. Welcome back, Rims and Tims. It's not morning. It is somewhere. The industry at 3:30 a.m. No, no, they close at 10. I just decided to post the pictures at 3 a.m. That pizza was amazing. Yeah. Buenos dias, Roy. It's only 8:30 a.m. here. See? So what do you guys want to talk about? All right, Rims and Tims, fine. Welcome back, man. Why dinosaurs are extinct? Meteors? I'm here just to hear about VIX moving on calls for the first time in a long time. Well, we'll probably discuss that more when JFresh gets on. But yeah, there does seem to be some very large repositioning on the VIX. That could be short term indicative of fears due to the conflict in the Middle East, or it could just represent a change in like our current volatility regime. My only current play is full port FXY. Well, that's a play. Angel Fire, I only play as Series 5 and 6C for Jan 24. I also have those shitty contracts. Maybe, right? I don't know. There's something about Syria that's kind of exciting. There's a massive like arbitrage play here, right? That's been open for years. As like the Liberty Media ownership, like everyone, all the banks are long on Liberty Media ownership, and they've been short Siri, right? And that went on forever. And the last time it kind of squeezed, we discussed, some of its potential, and then noted that it probably wasn't after it had failed $5, that it probably wasn't going to pick momentum back up again until like T plus 69. If anybody was paying attention to JFresh, we're about there. So maybe I think it was very interesting that after the merger deal, it's basically done nothing but go up from its bottom, and on decent volume. And Friday looked like it had some serious pressure. What's actually really interesting is that the positioning on it's always been kind of super exposed to volatility. Um, and it seems like it reacts strongly to increased volatility in the market. We'll see what happens with it. I mean, I still don't have like, I don't think it's gonna like squeeze to the moon or anything, but it might run up to like $6 or $7 again. Oil speculation, yeah. Oil ended the day on Friday up almost 600 basis points. I'm curious if the MM got wrecked. Nah, MMs rarely get wrecked. Or just bear positions on Thursday and Friday. A lot of, well, both Thursday and Friday. Most of the selling that occurred on ES, right? Like huge volume, like sell flows on ES. I think this, like Friday, at around 10 a.m. was like 100,000 sell side contracts. And then the other downside moves throughout the day were had pretty decent volume as well. I mean, obviously not as excessive as that, but and so what really happened there at the top was that bullish positioning on SPX just got annihilated in a few candles, right? Like so all the 4360 to 4420 calls that were on the chain Thursday night absolutely obliterated. And we also saw a huge spike in VIX on Friday as well. Although that got kind of under control into the latter part of the day as variance started to reduce. Thursday was also the third tail auction in a row. And this is showing a time series of reduced demand for long-term US securities, at least at the current yields. And that's going to start to scare people if it hasn't already scared them enough already. Because growth in the equities market is mispriced relative to the bond market, and something's going to need to correct. So either the Fed's going to need to lay off the gas and accept entrenched inflation, or equities markets need to reprice growth significantly over the next 5 years. You guys remember what we were talking about 2 weeks ago? Jewish space lasers? The Israeli Space Defense Force is preparing to deploy the Iron Beam laser point defense system to active combat service for the first time. Shit. A Siri move to 6 or 7 would net me a few thousand at this point. I'd be happy with that. Well, you might get your wish if Friday's price action persists. How's GME looking this week? Borrow rate's still not up. Yeah. How many big players does it take for that volume on ES? I mean, it could be one, right? It was a pretty consistent sell off, and it was pretty strong too. They didn't let up until we got back below, like way back below delta neutral. And then even then, like the next bounce was sold really heavily. There is no primary MM for SPX. So no DRM. Or not DRM, DPM. Are people still pricing in rate cuts by the end of the year? Equities are equities are projecting growth that is unattainable without significant financial tightening. So growth that's really can't happen at this point, right? I think the US has laser tech too. It's probably the same laser tech. Let's see what else looked kind of interesting. Upstart kind of had a wonky week. It started to get a little bit of a crossover, and then liquidity kind of came out of left field and it reversed back. But uh definitely starting to get overly synthetic short, right? Like that move to the upside took 2 days, and it was greater than 10%. So I'm going to be keeping an eye on that one, especially if it reverses back. It may. Fubo looks like it's getting shorted more, but the Russell 2K is almost. It's like getting to the point where the Russell 2K is almost too underpriced. I was kind of doing some comparisons with the S&P the other night, and like small caps are drastically underperforming the S&P 500, but like the R2K is still down like 30% from its highs. It's basically had no recovery. I mean, similarly to RSP, right? Which just, I mean, I guess it's just another way of looking at how bad breadth in the market is, but it's interesting. I mean, it's like 4.6 trillion in market cap. What's up, Dork? When trading intraday oil moves, do you have any preferences? I've been using UCO and SCO and USO for longer term moves. I don't trade oil intraday generally. If I do, I'll trade futures contracts like CL. But yeah, outside of that, I very rarely trade oil. I have equities that are exposed to crude pricing. I mean, I think if vol shorts pull off of Upstart, once they do, it'll drop really hard. We're definitely moving into that period of like credit tightening that presents a real threat to their business model. And I think shorts will come in much more aggressively after the vol shorts are out. So Upstart might have one little run left in it, and then after that we'll probably start to see the borrow rate rise and more significant shorting back below like the 25 to 20 level. What the fuck is Mama? Why is it ripping? They sell frozen meatballs? All right. Not a bad job on their net margins. I guess people eat these. I mean, consumer non-durables tend to be good in this part of the cycle. You saw the divergence from oil and gasoline. What's diverging from oil and gasoline? Are you saying gasoline's not high enough? It could be reduced demand. Is is one significantly cheaper than the other? Gas prices, I mean, gas prices are like generally like an instantaneous repricing against like um whatever like the local refineries are at, right? It's like the price you pay at the pump is usually pretty volatile. And that the effect of that could just be regional. It's thoughts on tech earnings. Will this be the round where they finally shit the bed and the Qs sell off? Well, one can hope. I mean, Apple shit the bed last quarter and projected shitting the bed moving forward. Microsoft wasn't too promising in their quarter three outlook. Tesla probably overpromised and will underdeliver. Um, Meta's Meta will probably be pretty flat. Google, uh, they might be having some revenue issues, especially given the fact that they've really been trying to like up their monetization on YouTube and stuff. Like they're aggressively attacking like ad blocking right now, and generally that's considered a really bad business move. I mean, I know Twitch lost a lot of followers when they did it, and they've gotten them back over time, but the initial shock to consumers is not favorable. Um, Netflix, not too sure. Not sure if it matters, but their subscriber numbers were down hard in the UK for like the first time ever. So that if that trend is broader going into earnings, they could take a hit too. Quarter three earnings aren't really projected to be super good. Most of the analyst expectations are kind of down. So yeah, I mean Tesla's expected like zero point 0.7 EPS, 0.73. Nvidia's are expected to go up quite a lot, but that's because that's what they promised. And if they're unable to deliver that, that could be very bad for their price. Netflix is expected up. Microsoft is expected to be about flat, slightly up. Meta projected upward. Google, pretty flat. AMD is expected to rise. Amazon, well, if Amazon keeps on track with their prior earnings, they should be able to beat 58 cents a share. And then Apple, also projected up despite their own negative guidance. So analysts are pretty bullish on all of them this quarter. I think it makes it for an easier miss. Definitely a shift from the first two quarters where analysts were projecting everything to be bottom of the barrel, so it wasn't hard to beat. So yeah, I'd say the risk of missing is higher. How much juice do bulls have to save their positioning? I don't know. They got fucking slaughtered this week on every pump. They just got. I mean, they had their like upside positioning destroyed basically twice, and then on Friday, even more of it. Right? Yeah, I'm not sure with the current like geopolitical conditions and macro conditions if they're going to be able to get much better than delta neutral. But if you guys remember last week, that was kind of my expectation. If we saw the hotter inflation prints, which we did, was that it would be really hard for them to beat like 4,400, and I didn't really think they could get 4,450 unless inflation was a bit cooler, and it wasn't, right? And the situation in the Middle East has only gotten worse, right? It's only escalated, and that's gonna, obviously, if that turns into full blown war, right, between multiple regions, it's gonna have a negative effect. It'll be great for defense contractors, but bad for tech, bad for well, probably good for commodities. Several service sectors could take a hit, especially a lot of tech has a big footprints in Israel, so um, that could hurt part of their revenue streams. Hasn't Nvidia proven they can just launder earnings? Yeah, but what if they can't launder enough? I know you're only half kidding. It's half serious, but yeah, I mean, if they miss on their laundering target, that's going to be difficult. Cool, Carl. Thank you. I'll check it out. So should I full port R2K? No, I don't think so, but I do think the cash flows there are better than they are in the SPX. And I think if there's going to be a chance for small and mid caps to overperform, it would be in a recession. So not full port, but I think R2K may fare a bit better than Nasdaq and SPX or S&P. Diesel's sky high right now, right? Is there a good income strat in this market? Buy treasuries, use margin to sell SPX condors daily, 175 BPS wide. Is 175 BPS wide daily condor worth it? Hmm. Yeah, I mean, I guess you could. 8% on risk. It's it's not the worst. It's not great though. I mean, your max loss is pretty insane. If there's a big move intraday, you're gonna get blown up. Especially on increasing volatility. Not really any data this week. Oh, there's some data this week. Not a ton. Well, at least we're past the inflation data. I think we have the really big stuff this week is manufacturing indexes. We have retail sales, Chinese GDP, and then we have housing data like into the end of the week, like building permits, housing starts. If that still looks really bad, that could be pretty bearish, or it could be seen as the Fed needing to do a little less. I think Japanese inflation rate also comes out this week. next Thursday, that may have some impact as well. So yeah, still some lagging inflation prints. I think China and the US are done, and EU. But we have Britain and Japan this week. And then US retail sales, New York manufacturing index, and then housing data, like housing market data. Yeah, I mean, there's income strats that make sense. They're just the higher VIX presents a lot of risk, right? Like this is definitely not a period of time where you want to be selling CSPs. Bad for airlines? What? Conflict? I mean, generally. Or are you talking about something else? What more do you think JPOW needs to see to assert that rising inflation is trending and take on an undeniably hawkish stance? I mean, I felt that the dot plot and his last comments already took on an undeniably hawkish stance. I think equities are just persistent and unwilling to capitulate to the like broader macro trends. And they'll be forced to, right? Because we're already seeing that. And, like people are gonna choose like the 2 and the 5 and the 10 year over the SPX because like the forward earnings yield on SPX is like 5.24, right? And that's a risk asset versus taking a risk-free like 5%. I mean, even the 20 year, I think the 20 year is still above 5 right now. Like, why would you ever loan? The 20 year just dipped below 5 on Friday. Yeah, why would you loan anybody money, or take on the risk of equities when you can just turn to treasuries for a 5% rate? I'm trying to get better at managing my strangles and straddles. I always pick the wrong time to cut the losing legs. I know some people just let them run to the ground. What's your preferred way to close? So I play them within the trading range, right? So let's look at this week as like an example. So Friday I opened a straddle here, right? Um it got, if I remember correctly, it got stopped out I believe on our test of like 4305. So the short leg. And then I let the long leg run because I was bullish on the day, but we stayed within the range, right? Had we fallen lower, um and fallen out of the current trading range, which would have been like below 4300 significantly, I probably would have closed both, right? So if we trade within the range, I'll keep the dead legs open. If we trade out of the range, then I'm going to collapse the whole position, right? And so overnight yields on the position are actually better here, where you're opening and closing in the same time period, right? Or you're opening and closing each leg separately within the current trading range, versus when you break out of that trading range and you close both legs, the yields are significantly lower, right? So the returns on an overnight straddle in here can be like 10 to 25% usually. And then if you break out of the range, so large upside move, large downside move, and you're collapsing both sides, your yields reduce. They go down to like 4 to 8% because you're closing that losing leg because you don't want to leave a floater too far out of the money, right? And most days I've closed both sides within like 45 minutes to an hour of market open. Unless we pick up like a really strong trend, right? So like a lot of the point of the position is to capture overnight moves, which have been large over the last 8 months. And so say you open like down 40 BPS, right? And you know, the put side of the chain is in the money. The odds of this continuing, at least right away, are very low. All of the puts are going to want to take profits, right? And the same is true if you open up 40 BPS, right? All the calls are going to want to take profits that held overnight. And so on that capitulation of the 0 DTE or prior 1 DTE positions, you get pullbacks, right? And then on that pullback, I usually close the other leg. And I would say 70% of days, this is exactly how it plays out. But understanding the trading range we're in, where that breaks and where you need to take that floating risk off the table is very important for managing them. Also, understanding the volatility environment and when they need to be moved to strangles to maintain efficiency. And we're getting close to that. VIX is almost at 20. I think a better way to think of them is like you have a call and a put, right? And not to think of them as, you know, not to think of it as a straddle. Like think of it as a separate call and a separate put. And you know, sometimes if I think the range is tight, like say the overnight move to the downside is 20 BPS, and we start to trend up, I'll cut the puts and then I'll leverage up the calls, right? So if I think there's going to be a bounce, I'll roll the profit from the put over into averaging down the calls, especially if the range to the upside is greater, like it was on Monday, for instance, or Thursday afternoon. Yeah, I mean, I kind of define the trading ranges as best I can in the daily. They're usually pretty spot on. Unless we get like a 2 sigma move or something. I don't think my ranges almost ever like break unexpectedly. Friday's stocks turned out big in spite of the fact that yields and the dollar were muted. However, gold and oil were up, so is VIX. Is this a sign the market is running towards traditional hedges? Well, I mean, oil and gold specifically, I think are due to, you know, conflict fears. Um Dollar wasn't that muted. It was a little bit muted, but it's also already very high. And yields were down. So I think we're seeing proportionally bond, gold, and oil buying, right? Which indicates fear. Equities just haven't really followed suit yet. I can get 5.3% on a building society account for a year. Why buy short-term treasuries gilts when I can get that? I mean, I don't know. I don't know what the gilt average rates are at, but like the 6 month treasury is at 5.5. Our gilts might even be higher, actually. Hold on. No, they're not. Two. What's your guys' shortest term? GB 01. That's 5%. Mm, GB 03MY. Yeah, I mean, so they're basically paying you like the 3-month yield. So I mean, it's the same as if you went and got the Treasury. There's a little bit of a reduction, right? 0.05%. Maybe it's closer to you guys like 6 month. Do you guys have a 6 month? Yeah. 4 point. So yeah, it's probably the 6 month, and then you're losing point 137 versus getting the gilt. On Friday, after going under 43.25 on SPX, how did they recover and avoid more gamma downside? They sold a shitload of puts and bought shorter dated and bought as many calls as they feasibly could. They were buying calls almost through the entirety of the end of the day, right? It was just that all of the breakouts were immediately met with like stronger future selling, right? Largely at like the 43.60 level. So they just weren't able to gain a foothold. Um, it wasn't that they didn't have a ton of open interest to the upside on SPX. They did. They simply weren't able to like ramp up onto it. In the few instances where they started to get some momentum, it was immediately crushed. So they successfully defended their Vega risk at 43.25, but that may not be something they're able to do tomorrow. And remember that every level of Vega risk they lose, the market maker is going longer and longer vol, right? Which basically on SPX is going to mean long puts. Um, they're going to go long puts, 23 to 30 days expiry. Since there's fear in the market, do you think that JPY will still be seen as a safe haven asset versus other non-US dollar currencies? I mean, safer than other non-US dollar currencies. Although I'm not sure that the dollar will be displaced in any significant way. Like it can come down, but I don't think it's gonna I don't think we're gonna get like a dollar crash or anything like that. And the more conflict and the more uncertainty there is, the stronger the dollar gets. It's funny how I tend to make the same mistake trading the real market and video game markets. I overheld my position in rubies in World of Warcraft Classic this week. Oh no. I don't know what that means, but that sounds terrible. Friday we talked about loosening control of VIX correlating the reduced ability to pump. Do you know the specific mechanics that result in this? Yeah. do you I mean I don't have time to walk you through like like VIX like vol bond correlations. I don't know what your goal is. If it's to have liquidity, I think there's a video, isn't there? I think there's a video where I go over the like inability to continue to control volatility. It's largely due to the demand and volatility increasing, right? As more and more people seek out tail risk products, their ability to control the price of VIX is going to diminish. And if they can't control volatility, then they're taking a ton of upside risk on their front end long exposure, right? Because they're buying short dated calls, which I mean we saw this week. Those have a lot of gamma, so you can pump the market on gamma, but there's very little delta in those positions because they have no theta. It's like trying to build the frame of your house with toothpicks. What your goal is, if to have liquidity, then a money market fund is basically what you're describing. Long duration can be very profitable when they cut rates. Yeah, I mean that's kind of where my head's at. I've been rolling over 3 and 6 month treasuries that I bought earlier in the year into like 2, 5, and 10 with some 20, 30 exposure. And that's like when rates do get cut, which will eventually happen, although they may never be cut to the like ZERP levels again. Um, the value of those like long duration coupons is gonna right up. I think PY will rise against other currencies, but not much against the dollar. Maybe sideways like the Plaza Accord. Maybe. Hmm. Interesting. I think it depends on if the short position on yen gets squeezed out. That's going to create a lot of volatility. Yeah, I mean, we'll have to see what the BOJ does, right? They could take less or more severe action, right? The BOJ could easily just move forward with like increased like just moving YCC up, right? Which like everyone knows doesn't solve their problem, but it does buy them more time. Or if they just move to a more like modern monetary policy, which would be obviously a far more extreme impact. A significant correction crash possible with the existence of our beloved zero DTEs. Yeah, even more so. So mostly this year you guys are used to seeing the effect of zero DTEs on the bull side. But selling, like buying, doesn't necessarily beget more buying, right? Like you can eventually pump to a level where the calls are simply too expensive and liquidity dries up. Selling always begets more selling. And you get, you get gamma squeezes, which can then be propagated by continuous put buying. And so, like, zero DTs to the downside are far more effective than they are to the upside. We just haven't seen a lot of that kind of happen. I mean, Friday was actually interesting. We saw a big explosion in out of the money zero DTE puts. And that's something we've really, I mean, even in like the worst parts of like September and August drops, like we didn't really see a ton. Like most of our downside move was continued by like longer dated puts that had come in when volatility was really low. But as volatility increases, and I discussed this a couple weeks ago, as volatility increases, participants are more and more encouraged to buy less and less theta, which means more and more gamma, right? So they're alternating from, they go from like vega to delta to gamma, right? Um, and that's something we haven't seen in the call side, because all of the call side momentum has been driven by like 0 and 1 DTEs. But on the put side, because of the pricing of puts are always more expensive, right? So generally when volatility is really cheap, people are buying vega, right? They're buying big vega exposure contracts, long dated, far out of the money, right? And then as volatility increases, they're more encouraged to buy, you know, they're more encouraged to buy delta, which is going to, sorry. Um, and when they start buying delta, this starts to have a direct impact on VIX price, right? This starts to move VIX up, because the projections of future volatility increase as the spreads shift, with the greater demand and mid dated, so like let's say 20 to 45 DTE options, and these are all more delta exposed and generally closer to the money but still out of the money. And then when VIX goes up even more, right? So say this is like VIX 15, VIX 20, then you're going to start to see gamma exposed positions, which are going to be near the money, and short dated, like 0 to 14 DTE. And part of this is just a natural, it's mechanical, because the price of puts over this goes up. Friday soon, my Google Weekly 139p's big time. This may be a bit to ask, but if you don't mind, could you go into how you actually go about reading and seeing this data? No. But there's plenty of research papers that can get you started on your way. And learning how options are priced is probably a big help. But the specifics, no, I don't really have any reason to. Chance of a Santa rally? I mean, not good. Generally, Santa rallies are kind of based on the big boost to GDP you get when people start spending money through the holiday seasons, right? consumer confidence is dwindling, right? Savings are tightening, credit cards are all blown out. Yeah, better chance of coal for Christmas, right? Santa rallies usually come at the end of a bad year, and SPX is up still substantially this year. And we're still up like 14% year to date, which is far higher than the historic average returns. Do you just read delta and gamma values on each particular contract in a series, or do you use something else? We use other stuff. I mean, just raw delta and gamma is not very useful. We have an entire channel in the Dillionaire's Discord that's people have like dedicated to just watching like the nave delta and gamma by strike across like the time series, and it has some value but not a lot. All right, let me see what Dork and JFresh are up to. What's up, guys?
What's going on, man?
How we doing?
Having a great day.
Are you
making some beer brats?
Nice? Are you in or out of the hot tub?
I'm out now.
Oh, okay. All right.
Yeah, I thought I'd enjoy a hot tub today for the stream.
Nice. As you should.
It's finally not 110 degrees outside.
What is it?
Got a lot of
90
weather in October.
Actually, probably like 75 or 80. Right now.
that's not too bad.
Yeah, it's pretty nice. 68. Oh, even better.
It's like 55 right now. It's 60 where I'm at.
I don't know what the temperature is where I am.
When's the last time you were outside?
Last night? Yesterday? I was outside yesterday. It's
right.
like 50.
Really sure
it's like 59 here. Me and Dork should be about the same temperature. I think we're on the same latitude.
No, I'm pulling up.
What's the chatter about? People want to know what Siri and GME you're gonna do still.
I got those questions. I answered them as best I could. I mean,
we are in the same latitude, Girk. That's crazy.
Yeah,
just about.
Yeah.
You're a few degrees higher than I am.
Yeah,
I think it's longitude actually.
But it's slightly warm. It's usually slightly warmer here than the same latitude on the West Coast because we have the Gulf Stream. Well, for as long as we still have the Gulf Stream.
Yeah, it's true.
Yeah, I'm excited. I hope I live to see the day where the magnetic poles flip on the Earth.
That'll be cool.
That'll be fun.
Is it gonna have any real effects?
I don't know. The Y2K.
Like, fuck up GPS satellites for a couple of weeks.
Well, if we have a solar flare while this is happening, it's gonna suck.
Well, okay, yeah. Then we go back to the Stone Age.
It depends on how big the solar flare is. If we get a Carrington event while that's happening, we go way worse than the Stone Age.
Just hope that the sun doesn't stick its dick in our direction, right?
I mean, polar flips, I think they last like a few years, so it's going to be tense times.
Okay, I take that back. I hope I don't live to see that.
I thought they were fairly immediate. Like there was still some radiation shielding, just not that much. I think it's weaker.
The problem is that your dipole moment of the Earth changes direction, and for a little bit of time there, your shielding actually, potentially could, your north and south directly at the sun, and that's bad.
Okay.
This is the real DD that people pay good money for, right?
Yeah.
It's great. Yeah. The physics behind polar shifts and like what causes the electromagnetic field around our Earth are actually really cool. Like the whole idea of the dynamo and the core, but like, is our core really actually a dynamo and all this crazy stuff? It's a lot of fun, and a lot of people really have put some great research into it. If anyone's into electricity and magnetism, there's a wealth of knowledge stored in, just in terms of like conceptual knowledge is packed into the whole study of the Earth's magnetic field.
Yeah, it's wild to me how little of the actual Earth's volume we've actually observed.
Like 2%, not even.
Most of the Earth's volume is inferred.
Yep.
Anyway,
I mean,
stonks.
yeah, probably. Unless we want to take this one step further and discuss how the Earth is flat and we're riding around on a giant space turtle.
That actually doesn't sound terrible.
I wouldn't mind that.
Sounds
That's
like
a cool
fun.
timeline.
Sounds more fun than stocks right now.
Well, I mean, if that was the, we'd also have like magic flying out of our fingertips and stuff. So that sounds
Did
kind
this turtle exist before last Tuesday?
No.
Okay.
Yeah.
Then I think we have identical working theories of the universe.
Okay, perfect. We should start a religion.
Yeah,
Okay.
yeah, we could do that.
Wow.
I'm down.
All right, cool. Please acknowledge
So,
that Dork's predictions last week were the most accurate. Wait, no, they weren't.
Really?
They kind of were, Girk. They really kind of were.
Were they? What did you call?
Did you plant? You paid
I'll give it
to
to
that,
you.
didn't
I'll give it to you if you got it.
I mean, the end of the pink line was actually close to our closing price on Friday.
Was it?
Yeah.
Good job, dude. Am I ever going to win one of these? No, right?
Probably not.
I don't know. I think well, my 4,000 prediction was directionally correct compared to you guys, but like I didn't really. That's a cheap win, and I didn't really want it.
I was hoping that one
You
of the
didn't win.
Dillionaires would put the prediction screenshot in the chat, but I don't see it.
It was pinned.
Someone's gonna. It's pinned.
Oh, is it
Yes.
pinned?
Yeah.
Oh, nice. Fuck you, Dork. Your prediction line is 42.50.
You know what? No, it's not.
You said we were going to go down all week.
And we kind of did.
Did we? No, we
If you
didn't. We're
ignore all
just
the
flat. If we just ignore all the flat.
Well, so the thing is you see the end of the pink line there, Dirk. You see the end of it, and then you just draw a horizontal line to where it is. It's right about 42.30 something.
Yeah.
42.28. Yeah. And where do we close? 43.27.
That's
So
like $100 off.
Yeah, but you
Anyway.
guys.
who's closest to the end of the week closing price? I think JFresh is.
Is he?
Oh, did I
Oh,
win? Is that the metric?
Fucking JFresh is the stock daddy.
Oh, jeez.
Oh, get wrecked. Yeah, dude, his line is like 42 fucking 43.20. His line is 43.20.
You goddamn Dillionaires fucking gaslighting me into believing I'm right. Fuck you guys.
I would say
Speaking of-
that my projection better tracked like the actual price action because it was just less volatile. But
Okay.
JFresh wins. JFresh won the end of the week.
I think in the future we need to just like provide the coordinates for our lines so that we can do a standard sum of errors analysis between actual price action over the week and the actual lines, and do whoever has the lowest SSE wins.
Oh God, but who's recording the data? I don't fucking want to.
So Girk,
I have enough data to deal with.
you can plot like segmented lines, like a series of them, trading view, and so we could just do that, and you could just leave them up on PX.
Okay, I could do that.
That's a thing. I don't care a lot, so like, I mean, if you want to do it, fucking be my guest, but like,
Yeah, no, I'll do that. I can just leave them up and like push them to the background.
Yeah.
And then also we can choose like a mid price for each day.
There we go.
And then we could get really, really granular about how right and wrong we are.
We could also get to a consensus measurement as well, and track the consensus and see if our consensus is at least accurate.
Ooh, gross.
This is
This is
why
getting really.
we have...
This is like I don't want to be an analyst.
Yeah,
Hey,
we have a
you're
lot
talking
of
to a
data
couple of
already.
nerds.
Let's see. Hold on. I'm going to the Spy Spix chat. Rate my setup here. Oh shit. Hold on.
What do you got? Are you posting chat or charts?
No, even better. I'm posting lunch.
No. Are they just bratwurst?
Oh, those look good.
I'm excited.
Where did you post them?
What's the beer you're cooking them in?
Michelob Ultra.
Oh,
Aw.
you should have
Yeah,
done
it is.
something like
That pan is
Pilsner.
overcrowded, but that's the way I like it. It's gonna be nice and thick. And I should have done what?
You should have done a Pilsner.
Or
I mean,
a amber, like an amber ale.
uh, no. I've tried a bunch of different ones, and I like the lighter.
Or a mead.
No, dude.
Ew. Yeah, that's too sugary.
You know
Yeah.
what one really doesn't work that I tried one time just because that's what I had? IPA. That's disgusting.
Mm.
I've thought about it, but yeah, it seems like it would just make your broth super duper bitter.
It's super gross.
You don't like weed sausage, man?
I mean, you could
Have you
do like
guys tried? Have you guys tried weed beer?
there's beer that tastes like weed. It's like super skunky. I was not a fan. I've had weed beer as well from the dispensary, and it's bland, and I'm not a fan.
Yeah, there's like for a while. There's, I mean, I guess after, well, they're still around, but like, especially after it started getting legalized, like all these breweries started doing like small batch weed beers. They're fucking gross.
Okay,
You wanna?
viewership's down about 20% now. We can start talking about stocks.
All right, cool.
Yeah. Good job, guys. Well done.
We did it.
So for Fresh, do you want to talk about your chart, or do you want me to talk about my charts? My charts are more macro. Yours is more puts or calls heavy.
let's
I want you
do
to talk
Dork's
about your
charts
chart.
first. Yeah.
Yeah,
All right.
yeah.
Gert, can you pop up Exhibit A?
Of course I can.
Okay. So this is the triple B triple A credit spread. And so I told you guys last Sunday I'd be watching this, and I have been. So the last print was last Thursday. We
Looks
won't get
really
Monday.
exciting.
Yeah, we won't get Friday till
Tuesday.
tomorrow.
Yeah.
Yeah, or yeah, something like that. The prints are not very consistent. But we reached the August high for the spread because this only goes one bip at a time. So, you know, or 2 bips maybe, but like I just did that. So we reached the August high, from end of September through October. That was pretty exciting. It got rejected. But I wanted to point out sort of the dynamics of how it got rejected. So that's why I put those effective yields on the chart, right? So you could see that what had happened during the rejection was that all of their effective yields rose, right?
Yeah.
And pretty significantly as well. Um, so that's the part that I think is something we need to take note of when we look at these spreads. They did drop, but effective yields rose a lot. And if you look at the high yield effective yield, it rose, more than the other ones. Although it's a smaller percent change, it did rise more quickly. So now if you could move on to Exhibit B, Exhibit B is is a spread of the high yield to AAA.
Okay.
And what we notice is from the beginning of October, the spread between high yield and AAA has grown significantly. It is up just about 20%. So this is indicative of us being correct in the credit market tightening,
Yep.
at least in the corporate bond sector, which is not good, especially this high yield spread going up so quickly. This tells you that confidence is exiting the market currently. Like right now, the perception is shitty companies are going to suck, and we should not be,
What are we
buying bonds.
looking at there from the September Fed meeting to the peak? percentage wise?
Let me check. I can check that. Shoot, let me hide this guy.
Or well, just to the current level. I guess you don't have to go to the peak, but
So from the September meeting, which day was that?
it's like, I mean, you only have 2 prints in that time period, so pick one. I think it was the earlier print.
So like the 10th, or what
Yeah,
was
it
it?
was like the. It looks like here on your chart, it's like the 12th or 15th.
All right, we'll go with the 15th, so we could just go from bottom to current. That's a 9.5% increase.
Okay.
So I guess it's not as much as I said. I'm a fucking liar, but it's a pretty big increase for the spread.
Yeah.
And you know, what it signals, what the market is signaling with this is sort of a like a bottom up exiting of the corporate bond market, a very slow one. So basically, people are saying shitty companies are going to fail, and we shouldn't be really buying very many of their bonds. But
Have you looked at
you know,
junk? Like junk to BBB?
I have not looked at junk to BBB. I'm sure that spread is widening as well based on
Yeah.
this. Um,
I just
but
wonder
I
how
usually,
much more accelerated it is. I'll check it out later.
yeah, I just keep track of these guys because it's sort of like an at a glance thing. And
Yeah, I mean it's kind of wild how little that those bonds the rates have risen or the spreads have risen, isn't it?
yeah,
Or am I like missing? I mean, it just seems ridiculous how small the spread is between government assets or government bonds and like junk
in
bonds
AAA.
or close or even close to junk bonds. I mean, how much stuff is even AAA anymore? The U.S. isn't
There's a
even
good amount.
AAA.
I mean, it's technically all AA plus at this point because you can't have a rating better than treasuries. So the next best thing is the same rating as treasuries. So like MBS now are AA plus just because the treasuries, rating got downgraded to AA plus, and everyone was freaking out about all the MBS getting downgraded. I forget if we touched on this, but that was purely like basically a requirement that you can't have something lower risk than U.S. Treasuries, and so that's why they got downgraded. But yeah, the spreads have stayed relatively tight, but that's just because bonds have collapsed so much that we're like almost in a sort of distribution phase. Like if we zoom out on these charts, right? I can zoom out on these guys so we can kind of see a little better what's going on. This is going to be both of them overlaid. Let's see. How should I? Yeah, this is a better look at, so you could actually see like sort of the bond market collapse, right? So we'll go like here. I'll include 2020.
Did you put it in chat?
I
Okay,
just
cool.
put it in there.
There we go.
So we're really in like a big old distribution phase, right? Where everybody's still trying to figure out which way things are going to go, right? And I won't do TA on spreads. That's bad practice.
Yeah.
But you see if you subscribe to the Wyckoff sort of price analysis, um, what you see here is a big distribution phase over the last year and a half or 2 years or something, year and a half. And this is, what this is indicative of, if we extrapolate forward on that type of analysis, is further upside movement, like another leg up, so to speak. So these spreads have remained tight, but that's just because of the illiquidity in the credit market, and it's only going to get worse. And when it does, we will see these spreads expand further as liquidity goes down more, to the point where people lose interest, and at the same time there are offerings coming out, right, as liquidity sort of liquidity sort of comes back in, but only to one side, right?
Yeah.
To,
Yeah.
I think that's your second law.
Yep.
Yeah, so there's going to be liquidity coming in. It's not going to be the way that we want. I mean the banks. It's not going to be the way that they want or the way that these companies want. And yeah, it should push these spreads up
Yeah, I
because
agree.
the only thing people will be interested in the end is going to be the highest rated shit. And that's sort of like these. You see, like it's like the bottom up sort of. I guess you technically call it the top down, but it's a bottom up sort of uh, exit. I don't know if it's necessarily an exit, but it's like a bottom up sort of loss of interest in the market.
Mm-hmm.
And so that's kind of why we see high yield spread versus AAA, increasing at a higher rate than triple B, AAA, because that's sort of showing you the beginning of this type of a market cycle.
Yeah.
And it's something to watch out for. I'm still keeping an eye on this shit. I'm probably just going to use this overlaid chart at this point, just because it kind of gives you a little bit easier way to look at both of them. You could
Yeah.
always just hide what you want. But
Okay.
yeah, so we're seeing. I don't know. This isn't like the credit crunch, obviously, but it's a
Closer
sign
to
that
it.
yeah, it's a sign that the debt market is definitely tightening. And we're going to be seeing that the impacts of that on the economy as larger and larger firms find it harder and harder to get better deals on their debt, and that's going to eat into their profit margins, and we'll see a further K-shaped sort of economy until it actually gets hard for big companies to get such insanely competitive rates like they're getting now.
Yeah.
So what you're saying is yellow all in long means 7.
No.
Well, actually, so I could go over my data if you want, or at least what I've been watching between short vol and long bonds play out in the market. And this is a little broader, but it's still macro, and so it might be more relevant over the longer term period. If Yeah, I'll dive into it before we get to your VIX stuff, because that's going to be a more immediate impact. Um, so dollar is continuing to rise, and like economic instability, and well, political instability and economics instability are creating a flight to the dollar that's persistent, right? Even though foreign demand on the dollar is down, it's still quite high, right? And like um mostly what we're seeing with the last three auctions, uh with the last three auctions ending with those fat tails, is that foreign investors and domestic investors alike are just demanding a better yield on risk. But the demand is there, right? So if yields rise to meet their risk demand, then the demand for those securities will be present, right? And so kind of what we saw this week with those tails is that everyone's demanding higher yields, basically. And effectively that's quantitative tightening, but outside of the Fed's control. And bulls are going to try to push the narrative that, oh, the market's done enough QT, and the Fed doesn't have to. But remember that as the market does more QT and drives those yields up, the demand for those bonds is going to increase, which is then going to reduce the yields, which then leaves the Fed free to do more quantitative tightening, right? um and structurally this means that we're seeing a shift from that short vol dispersion and on equities into long vol bonds, like long bonds, long volatility. So this would be short vol, long equity, and this is long bonds, long vol, right? And we're starting to see this transition occur, and we're starting to see it occur more and more rapidly. If you look at correlation like 1 and 3 month correlation versus the SPX. The dispersion trade is still breaking down. And even in this pullback, where they tried to kind of get that long equity short vol rolling again, failed. Like, it failed hard on Friday. Most of our move back to the upside and correlation here was Thursday and Friday. With this being last Tuesday through Wednesday of this week, to the downside. So they really pushed on the pump as hard as they could, and I mean, ultimately they failed to bring correlation to a new low, right? And so that dispersion trade is starting to break down on its own now, despite their attempts to stabilize it. And you can kind of see that if we look here at the that bond yield curve, vol yield curve comparison that we've been monitoring over the last several weeks. Anytime they try to push, so at this point, if they try to short vol, reflexively, that is going to create demand on yields, right? So that's going to create bond demand. And when they create bond demand, they create long vol demand, right? And so, we're in a very similar situation to what we saw prior to the financial crisis, if I go back that far. As far as volatility and bonds are concerned, right? Let me get rid of ES here. Okay.
Well, so an important thing to point out too is when you say vol demand, you're talking about future vol demand, right?
Yeah.
And that's why we see VIX starting to enter backwardation.
Yes. And so, if you go back here, you see yields moving away from vol, but eventually vol demand picks up, and you get a crash, right? Because you get a big spike in volatility with a big demand, like spike in bond demand. And we saw this happen really, really fast in 2020 because people weren't very prepared for it. But we're getting to that point now. We're actually quite close. If we look down on a more granular level, like the 15, you will see that any attempts at shorting volatility are met with immediate demand for the underlying for bonds as yields climb, right? So they short vol, yields go up, yield demand rises, vol demand rises, right? And we almost saw this break again on Friday, and that's part of what's leading to these like rapid sell-offs, and what's drying up liquidity in our current environment is that that money is leaving equities. That we see these big blocks of like future sells, for instance, like hundreds of thousands of contracts. That money's leaving equities and going into bonds. It's not going to come. It's not going to come back.
Let's be realistic though. Money has been like net leaving equities most of the year and going into the bonds most of the year. So
it's happening at a much faster pace, and there's less liquidity now.
Yeah. No,
right?
I think it's finally starting to catch up, but it's been a wonder that obviously I think we all sort of agree that all the mess of March through the summer was mostly momentum based.
Yeah.
Yeah, now that's starting to collapse, and yeah, it's fun. It's exciting.
And you can see some of that de-risking right now. Remember, this whole process is a process of de-risking, right? Where in line with bond volatility, right? We're seeing correlation reduce as bond volatility increases, right? So I guess that's something we saw more heavily in March, right? Where bond vol and core move up and SPX moves down. But now we're seeing it kind of incrementally broken up. as they tried to walk this down level by level, right? Over the last several months. But now bond volatility is starting to pick up more, and they're losing control of that aspect of the trade, right? So bond vol down, market goes up, right, and then correlation goes down. But bond vol up, correlation up, market down.
Yeah,
Right.
they've basically hit the point where they've hit the point where the bond market's fighting against them an equal
Yeah,
weight to what
and
they're
we could
putting
see
in.
that with
So
like
they're
this newer higher high in bond vol, right? Where we kind of hit a break point here at the beginning of October, or well, end of September, as bond vol, like after the Fed meeting, really, right? Bond vol just starts to skyrocket, and then the ability to bring correlation back in check becomes diminished because the demand for long volatility in order to hedge bond portfolios is higher, right? And that's not gonna that's something that's not gonna go away. That's gonna continue to build up as we move into a higher volatility regime. So I kind of wanted to point that out to everybody, and this is something we've also tracked here with like VIX correlation week over week. We've been seeing it rise pretty strongly, with this week being the first down week, where they tried to get correlation back under control. If they continue to lose, if they continue to lose ground on that, we're gonna see VIX, spot VIX, and its contracts in front uh, become more and more highly correlated, which generally leads to longer periods of increased volatility, like we had in 2022.
Yeah, you could tell there was. We're at basically exiting 2022. We entered a low vol regime where people were definitely piling into that part of the trade, and that does seem like it might be maybe starting to unwind right now, at least just on the spot VIX side.
Yeah, and so
Uh,
that's why I wanted to go right before you, because then you can follow up with your thing.
yeah, no, this is super exciting to hear all the different pieces, as everybody here knows. I'm learning more about bonds, but I'm mostly an idiot when it comes to bonds, which they seem simple, but like the market mechanics of bonds, I haven't quite gotten my head fully wrapped around yet, at least not like options, which has taken up most of my interest for 2 years now. Are we ready to talk about
Yeah,
my chart?
absolutely.
Okay.
It's
Yeah,
right here.
so
I'm gonna open it up. There we go.
So on Friday, I think most people that were watching the trading intraday noticed relatively quickly in the morning that SPX was going up, but VIX was also going up, and it was quite strange behavior. As we know, they usually go the opposite way because you short VIX by shorting puts, which causes market makers to go long on the SPX. And so both of them going up was very suspicious. And then as VIX kept going up, it became clear that something strange was going on. Because in the past, I think it was in December, Jan, earlier on this year, this VIX up meant that they were squeezing out short calls, and that behavior sort of continued all the way through the summer.
Yep.
But there's no more fucking calls to squeeze anymore. So that's why on Friday, VIX up, SPX up was quite strange. And obviously, eventually the upside on SPX broke down, and it just became this sort of just embittered battle that ended up ridiculously at 43.25-ish, right?
Yeah.
Watching that megaphone just grow and grow, it was painful and ridiculous.
I actually did great on the early part of the day, and then I lost all the money I made in the morning Trying to play that stupid fucking megaphone.
Yeah, I threw $100 at it just to see what would shake out, and that went nowhere, unfortunately. But it could have. It looked like it was just ready to absolutely explode. Anyway, so then of course, being the very renowned scholar that I am, I went directly to Twitter
Yeah, of course.
to see what all the tweeters were tweeting about the VIX. And everybody else, of course, noticed that the VIX was doing silly things. And they all quickly coalesced on the theory that people were afraid of the war that's developing in Israel and the Middle East, and margins are starting to get pressured a little bit. Primes are coming in and saying, "Hey, we need more collateral." And so the story goes that everybody was piling into long hedges over the weekend, right? And so then the logical, obvious conclusion to that would be, well, on Monday, if nothing happens over the weekend, on Monday, everybody's just going to start de-hedging that weekend risk. So vol should go back down, SPX should go back up, and and on we go back into the same thing. So I decided, okay, well, I could test this, right? I should see an elevation in the buying of call options on the VIX, if that's true. And surprisingly, what I found was exactly the opposite. So there was nothing remarkable about the call side on the VIX, either as a percentage of total OI or broken out by like strikes. I mean, maybe VIX 20 went up a little bit, in that range, 2025. But it wasn't anything outside of the realm of normal volume on the call side. What was really interesting was on the put side, puts were closed in quite a dramatic fashion, which surprised me, because if you are trying to hedge a long tail that you have previously not been hedging, or not, you're overexposed to it, you'd think you'd want to go long calls, right? So closing VIX puts is something else entirely, and I don't think it has as much to do with the narrative that's being pushed of weakened war risk. I think this is more longer term vol shorting,
Risk off
sort of
in the
trying to.
dispersion.
Yeah, so I think people who already have a bunch of risk on long tails are trying to get out of it, not enter, right? So it's different, right? Instead of trying to enter the long tail market to
Yeah.
hedge risk, they're exiting the long tail market to hedge risk,
Yeah.
right? And so to me, that's indicating that short vol is starting to think that their short vol positions are at more risk than they have been historically, to quite a large degree. I mean, this is the largest single day move in put side vol, or put options on the VIX since the beginning of 2022.
Yeah,
So you think
we
about
almost
all
had
the
a
other
few market crashes in there too.
ridiculous things that have happened in between then and now. And there was less de-risk. There's less. So what's also really interesting is right before this massive collapse of puts on the VIX, there was quite a big accumulation of puts on the VIX, and so before Friday, somebody was piling in, trying to stop the downward momentum on the market.
Yeah.
And so what I think is happening is that the people who were pushing against the market going down are giving up. And if that's true, next week should be a lot of fun. If I'm pulling way too much, again, the VIX options market is nowhere near as big as the SPX.
Yeah.
So the SPX
remember its effect on SPX is derivative, right?
Yeah, there's a lot of links in that chain that have to go all the right way. It does have an effect on SPX, but because I have some vol puts on the SPX that doubled in price on Friday.
Yeah.
So and I think that's directly a result of the closing of those puts on the VIX, and that you know, passing over into the SPX. But yeah, so I mean, if this is true, we're going to 4,000. If it's not true, we're going back to 4,400, VIX 12. So take your pick.
Well,
Or
I
we'll
will
just
say
trade
it's
flat for a
interesting
while.
that it lines up with the increase in bond vol, and the snapback in correlation, right? So, um, if we're gonna see equity vol tank, actually, there might be a case here that equity, like this would move equity, like broad equity volatility down more than it would move VIX vol up or SPX vol up. Um, but I mean, it lines up with what we're seeing in like the bond volatility in the bond market, right? And
Yeah,
it also lines up with what we've been seeing all week, which is them. I mean, like this week was really interesting because they sold, unlike any other pump, right? Like we've gotten these pumps. We got one in August, and that failed into the beginning of August. We got one in September where they really tried to break back up above gamma neutral. Now they're trying to break up above delta neutral and failing. And when these fail, they tend to be pretty spectacular. But every other time we've seen them increase long term Vega risk, right? And this time they've increased like shorter term Vega risk far more than they had. Like so, all of the selling of puts has been into this OPEX versus prior pumps where they were selling like 41 and 4200s out into December and January and March even of next year. Now they're selling everything 1 week out, which means obviously they're not getting as much credit for the amount of Vega risk they're taking on. And so, and I feel like that presents a pretty clear opportunity to anybody who wants to systematically bet against them, right? Because
oh
they
yeah, they're
simply don't
so
they don't have
exposed
like,
right now.
yeah, they don't have nearly as much delta. They're not able to get as much leverage. They have to sell 10 times the amount of puts in order to get the same amount of credit in order to leverage the upside, right? And so I think they thought they could try to sell like the 4350, 25, 4300, 4275 into October 20th, use the pump to start de-risking their, and they have been since last Monday.
Yeah,
There's been pretty persistent flows in the long-term sold puts, and they've been pulling those back 4,000, 4050 all the way up through 4200, and we've been seeing like big blocks of contracts like 1,000, 2,000, 5,000 at a time close out in that those really far out of the money ranges, right? Especially as they were getting VIX down in the early part of the week. And I think they were hoping that they could kind of skate into OPEX without volatility really spiking. And then all of that near term risk would fall off and they'd be prepared for what came after. But, obviously everybody else in the market sees this super transparent positioning and you get, you know, futures sellers just coming in hot and blowing up their blowing up their weak ass gamma positions, right?
yeah. No, I'm enjoying it thoroughly, and I hope it continues. I agree. I mean, I think before this week, I was sort of begrudgingly anticipating a lot of volatility, but also plenty of upside into OPEX. But I don't know if they're going to make it. I mean, it's going to be it's this week, I think is going to be an epic battle.
Yeah, yeah.
There's going to be all sorts of crazy shit happening.
Which could be really boring for us, but
Yeah,
um,
violent sideways action
violent
could be what
sideways, yeah.
occurs.
Because I think at this point the risk at, so they already lost the risk at 4350 and 75 on Friday. Both levels they'd stacked. Remember Thursday they were selling in the money fucking puts and
Yeah.
for October 20th at 60 and 75, trying to bounce the market back from the actual like public execution that occurred after the 30-year auction printed. And so and they barely got it back, and then Friday morning, they bought all of that out of the money call exposure, which got deleted. So from like every call from 43.75 and up, just eviscerated, and then basically every call from 43.75 down to 43.50 moved out of the money so quickly, or lost profitability so quickly, that uh they were selling those calls for nothing on their stop losses in order to just get out of the position in time. Then obviously Vega, the market maker Vega, is gonna, like, their long Vega position is gonna increase every one of these major levels we lose. And so going into tomorrow at 43.25, if they were to lose 25 and 4,300, they're fucked.
Yeah. No, yeah. So
So
huge sold put positions at those locations, all the way down to 4,200.
yeah.
I mean, they were almost screwed when we were like, knocking at the door on 4,200. They were about to get leveled, and they just like pumped everything they had into rebounding it and did a pretty good job. And now that's collapsing, and the fact that that's collapsing could be it.
It might, very well could be.
I hate to say this because positioning for a market crash just makes people lose money.
Yeah.
But I wouldn't be shocked if the market
crashed.
Didn't crash, but like, let's just say had like a -5% week in the next 2 or 3 weeks. It wouldn't shock me. I don't know that I'm positioned for that, but if it happened, it wouldn't shock me.
I'm probably not either, but I tend to agree with you. Just the way they've managed the risk on that short put position, where we're at now, and
it's fucking wild.
Increasing.
There is no management of risk. It's all in. It's just YOLO.
I know. It's been really. Don't get me wrong. It's really fucking stupid and really, really fucking desperate, right? And so they've put themselves in this position, and now they've got like this. They've created this huge amount of gamma risk in the short term by selling shorter dated puts, right? Yeah. So whereas before they could defend these levels, there's no defending like 43.50 sold puts for October 20th, right? Like the hit to your margin is fucking immediate.
Those things are bleeding hard.
And they were selling them at VIX 16, and VIX is at 1950 now. I mean, it's just yeah. And those are sold, those short dated fucking puts are sold all the way down to that major level of longer dated puts at 4,200, right? So like the chance that we could just collapse through that whole range, I mean, there would be margin calls.
It would continue down to, I mean, those sold puts in that strategy continues all the way down to 4,000.
Yeah. And then at 40.50 you hit the JPM long puts, right?
Yeah. And I mean, we're already at the point where, I mean, I guess the meme 7 still got a little bit more pump in it, but we're already pushing the limits of the last 5 years on breadth, right? So everything else is already like ready to go. Nobody wants anything but those 7 stocks.
Those seven stocks are mostly institutionally owned. So they've concentrated all their risk in the Mag 7. So like all of their equity risk is sitting in the 7 most liquid stocks that everybody and their grandmother owns.
Yeah, it'll be interesting to see what happens. Do you think Tesla earnings is going to matter this week? We got a lot of earnings. I mean, I think it's going to be
really
starting to ramp up.
Not good.
Well, yeah, I mean, Tesla's earnings aren't good. I think it's going to be garbage, but does that matter, right? We have to ask that question in this.
Well, yes, because look at the amount of market cap that Tesla's picked up over the last
It's insane.
2 weeks, 3 weeks since it's low, right? And also remember that Tesla and Meta are largely chosen because their exposure in NQ wasn't reduced. So like they're like the smaller basket of the Mag 7. There's like 3 shitty stocks at the bottom. Well, 2 really, Meta and Tesla, like the under $1 trillion market cap stocks. Like those didn't lose weighting, and so increasing the market cap of those in order to stabilize like the dispersion trade is more important than the bigger ones.
Yeah, I would agree with that.
And
Yeah.
so like we've seen both Tesla and Meta pick up a bunch of market cap in these pumps recently, whereas before they kind of trailed behind like the amount of market cap picked up by like Apple, Nvidia, Microsoft. And so yeah, I think
now that Microsoft
losing
and Apple have been really
losing
struggling.
that support is going to be really bad for them if Tesla shits the bed.
Yeah, I'm excited for it. Let's see, we've got Bank of America tomorrow morning, right?
Yep. Yeah, the banks actually look pretty good. I mean, right now they should.
Here's the thing.
They're lending against, Bank of Japan's interest rates, and they're lending to literally fucking everyone.
Banks, though. I agree their revenues and their all their year-over-year numbers and everything look good, but look at the deposits are down and credits up. So they're getting all of these great earnings by increasing leverage. And, that's great. Basel III probably has different ideas about how that's going to end up, right?
Well,
But yeah, I mean, in the short term,
what about the small businesses and regional banks that are most affected by this, Jay Fresh?
Fuck them.
How does your congressman feel about supporting small businesses? Small businesses are they're going to be ruined by these Basel III deposit requirements.
You know what? I'm going to say this right now. I got my mortgage. I got both of my when I moved here, I got both of my mortgages to a bank here because I really like the person the loan officer. They did a really good job. The first mortgage they sold off to U.S. Bank, and that's great. I have all their online tools. They kept my second mortgage, and their online stuff is dog shit. And so I'm at the point where I'm kind of hoping that they just go under, so some bank with better online services buys my loan. That's kind of where I'm at this point. That's how I feel about small banks.
I feel the same way about all banks, but I get where you're coming from. Yeah, I mean,
Bitcoin fixes this.
No, it doesn't.
I know. I'm just kidding.
Dork, any closing statements?
Is
he still here?
Yeah, everything's fucked.
Okay.
Yeah.
I mean,
so same as last week, same as every week.
I meant more specifically any commentary on the volatility situation.
And on my current mortgage.
Or JFresh's mortgages.
The online payment.
I mean, JFresh, I mean, really, I mean, you're holding the biggest anti-bag in the universe just entirely in your position. Your life position is very much advantageous, and your mortgage is going to be fine.
Yeah, I know the mortgage is fine.
In 5 years, if you miss one single payment, they're going to try to foreclose on you. But that's neither here nor there. But in terms of this whole vol thing, I mean, this whole situation has been a long time brewing, and this is one of those things that tells you that materially, especially with credit spreads going the way they're going, materially this tells you things are getting worse, not better. The overall situation is starting to shift, and it's doing so in a crappy way. we had Larry Fink come on Bloomberg and say things like people should be like 80% equities right now, which tells me that things are getting pretty bad. So, I mean, the whole like it's so like when you see spreads widen like this, it only encourages more vol hedging of your convexity of all your bonds, right? Not just
Yeah.
treasuries, but all your bonds. So I I mean, obviously I'm just a bear, but like the amount of data accumulating that supports the bearishness is getting really, really big. And especially with inflation reigniting and the economy still being kind of milquetoast, like we're just looking at pretty much the classic signs of mild stagflation at this point. We'll see if it ramps up even harder, either on the inflation front or the economic stagnation front. But it just as the situation gets worse and worse, we're going to see these spreads widen more, and we're going to see more people wanting to hedge judiciously with bonds, and it's going to be very interesting to see how this plays out over the next 6 to 8 months.
Should we all
Can I
just
just
take
say?
them? Oh,
Oh, I was just gonna say. You said because you're a bear. Can I just say? I think and we probably all feel this way. I'm getting kind of sick of being a bear. I want this shit to crash so I can be a bull again.
yeah. You
Yeah,
know, the beginning of this week when I was just like, I'm going full bull. Um, and I'm gonna capture this fucking upside bounce, which I actually did pretty well. It was we had a nice bounce before it got crushed. Um, that felt good, and I miss that. I don't like being a bear. It's everyone's
It's
treated us
exhausting.
like we're insane all year. And you know, the don't get me wrong, like the sweet vindication of rubbing it in all of their faces is going to be glorious. But I really do want to start buying calls again. And
Yeah.
I kind of agree with Jay Fresh. I really want this to fucking be over.
I just want to buy stocks. I just
Yeah.
want to be able to hold
I
stocks.
want to go
Feels good.
long on a.
Are these ones done?
You,
Yeah.
you know what I'm tired of? I'm tired of selling in the money covered calls on all my long positions because maybe the market crashes next week because these dipshits can't hold it up another 5 days, right?
It's just
Yeah.
annoying. I mean, well, like it's. I was talking to Jay Fresh about this the other day, where like being a bear is like watching a train crash in slow motion and nobody paying attention to it, right? Like, or like it's more like a cruise ship heading into port at way too high a speed and no one really notices until it's like 10 feet away,
Yeah.
right? And so you just sit here and you have to sort of, weather a lot of criticism. And not only that, but you have to watch as the hubris of the general public plays out in their favor over and over again.
Yeah.
It's just it's maddening. But at the same time, you know, in the end, things will make sense. They will make more sense, I should say. They won't fully make sense,
You
but
mean
they
like
will make
5
more
years from
sense.
now when they actually talk about what's really going on?
I mean, yeah, there's going to be a point where it all happens, but like,
I can't
yeah,
wait to see what the narrative is after it all goes down. What kind of bullshit thing they pull out.
it's going to be, well, there's going to be a reason why a specific entity collapses. They'll use them as the scapegoat for everything and then just go back to what
Do
they
you
were
think
doing.
it's going to be because they sold a degenerate amount of puts?
Yeah, probably.
They
I
sold
highly
so
doubt that
many.
that's going to end up that's going to end up being in the media. Nobody knows what a put is.
Yeah.
No, it's really going to be the Treasury short squeeze that's going to happen is going to be probably, like, I was joking about it at first, but like as they went higher and higher, it kind of became less of a joke. But
Yeah,
there's a very good
there's
chance
no
the Treasury short
dispersion this
squeeze.
time to like rebalance that treasury short. So it's just fucking sitting there, right?
It's trapped.
Yeah.
Yeah. It's fucked now. And this is I don't know if you guys remember, but like a few months ago, I fucking went off on like Bill Ackman on Twitter
Yeah.
for this exact reason
That's such
because
a moron.
the demand, like we were already so close to seeing to seeing like the yields exceed the forward returns of S&P, right? And like everyone assumes that, you know, there's going to be some like utopia where we have 8% 20-year yields, but you know all these banks are sitting on like 2% with duration, right? And they're gonna like if they get an opportunity to roll that shit forward to 5%, they're gonna take it. And now they're taking it, and you know I really don't like. I think there's some room for bond yields to move higher. We might get like a
Yeah, I
big
do
we
too.
might get like a big spike, but it's gonna be over fast. And like I'm picking up yields now at like 5%, and I'm perfectly happy with it. You know,
Yeah.
I don't like sure if I can get some at 7 or 8, awesome, but that's gonna last what, like 24 hours, if that.
Yeah,
You
it'll
know,
be
and,
quick.
and and it'll just be met with every short position on bonds trying to get out at once. So yeah,
Well, the
I don't think the
problem is,
short like the short
You
bond
know
players
what?
are going to
Just
be.
let Bill Ackman, just let him lose. I think it'd
Yeah,
be great.
no, I mean it'll be funny.
so the problem with the short position though, and everyone trying to get out at once in the rush for the doors, is that it's so big that I don't think the Treasury market is going to be liquid enough for to
Yeah,
handle this.
that's
And
let's
the
we're
point.
going to
let's talk
see
about
a
how
massive.
big it actually is.
It's big.
It's
It's big.
almost all the bonds, like all the US treasuries are like of I think 444 potential billion in shorts. It's 283 billion is shorted.
Yeah, if all that
It's the
liquidity comes
tippy
in,
top percentile. Historically, there has never been a larger short on US treasuries.
It's gonna be fun.
yeah, if that all flows in like a 1 or 2 days, like we will see the biggest swings in yields we have ever seen, and they are going to cause all kinds of problems for fixed income, pension plans, all these fucking groups that are, trying to buy treasuries or sell
It's
treasuries.
fine. They all own Apple,
They're all going to get
Microsoft.
blown up. Like well, you know what? They depending on what they're invested in, you'll see yields do these crazy things, and there's a huge risk that comes along with that because of how intertwined treasury ownership is in the entire financial system. And it's going to be incredibly dangerous when it goes off.
I mean, if yields spike to 8% tomorrow, how many hedge funds would be called immediately? All of them.
How many pension plans
How
would
much
get
how much
fucking
better yet, how much margin would just immediately be collapsed? The primes are going to take their risk off the table right away.
Well, that's not even you're not even like there's also the risk to all the investment plans that are out there
Yeah.
that are levering into yield, right?
Yeah.
It's a huge risk, and you'll see it spike and then you'll see it tank, and you may see that go back and forth a few times before a direction is picked, which is probably going to be to the downside, but like it's just super duper dangerous for anybody leveraged into yield products, and it's going to be very bad. The whole outcome could be people running around with their hair on fire if it all plays out that quickly, right? If it plays out slow and these shorts can unwind over time, it's not that bad.
But
But the amount of
they've been doing that, right? I mean, like this is pretty like direct evidence of them attempting to unwind since March, right? And then they
but
just
you can only do
fucking
drops in the
failed.
bucket at a time, right? It's so huge
Yeah.
that you can only do tiny bits. Like this take years to unwind, years and years.
All
You
right,
can't.
guys, my brats are ready.
All right.
Let's get
Yeah, let's get our
our
predictions in for the
predictions.
week. You start, Jay, first, so you can get
Uh,
to your brats right away.
I'm gonna go.
Hold on, I need to get the fun line. Where is it? It's like poly. Yeah, there we go. All right, Monday.
I'm gonna have you draw a straight line from Monday to Friday from the current price to 41.50. Easy peasy.
All right.
All right, guys. I'll look at the snapshot that's tagged later. Good luck.
All right. Everyone enjoy your brats.
See you guys.
All right, Dork, would you like a more nuanced approach?
Yes. So I go from, so we'll just assume no gaps because it's just easy, but up on Monday to shoot throughout the day to 43.50.
43.50.
Yeah, that's not much. Yeah, to end of day Monday 43.50. It's not going to get there very simply. It's going to be violent, but I see us closing there in the pushback. And then then from there, I mean, you can't put gaps on this line, but from there, I would say through Wednesday, probably back to 42.75. And then Friday, probably up slightly, maybe 4,300.
All right, like that.
Yeah.
Hold on. You want, what color do you want? You want pink? You want blue?
Yeah, I'll do pink. I like
Okay.
pink.
I got a hot pink here somewhere. There we go.
Pink was an amazing musical group.
All right. So I think tomorrow we lose a little ground on the collapse of charm. I think we could see 4,300. I think we test, move back up. Could retest delta neutral by Thursday. We start to fail. And then Friday. There. So I'll go with, I'll make mine that color. There we go.
It better be green.
It is.
Okay, good.
I'll
Okay.
make JFresh's white so it fits with his theme.
This tinfoil kitty outfit.
All right. Yep.
I like it.
So I think our only disagreement there is just the middle of the week, really. Well, I guess we're opposite beginning and middle, but our ending of the week is fairly similar.
Yeah, I think that JFresh, I think he just wants he really, I think, honestly just wants the fucking ball shorts to die.
I kind of want to agree and say like Friday would be like this. You know what? Yeah, I'm gonna say Friday is gonna be worse.
I don't think they give up that easily yet. I mean, they could, but
I don't know if they'll have a choice. But yeah, we'll find out.
yeah,
But I think Friday is our biggest down day.
it would make sense, right? Because we got OPEX next week.
Yeah, we're gonna have that charm fall off on Friday in the AM expiry. So
Yeah. Okay.
what little
Yeah.
is left, which is questionable, because I think charm might be already turning negative.
Yeah. I just have I have my ooh, there's a 20-year bond auction on Wednesday. Poopy Pants just told me.
Oh, is there?
Yeah.
Okay, hold on. do we both want to lower our Wednesday? Actually, no. You know what? I'm gonna leave Wednesday high. There we go. I'm gonna do that. Do you want to move yours because of that?
Nah, I'll stick with mine.
Okay.
Just because I'm too proud.
All right, that's fair.
But I think Violent Sideways, I don't see this unwinding that quickly, especially heading into OPEX. Like if it unwinds that fast heading into OPEX, like we're in deep doo doo.
I think we're in deep doo doo.
Whoa, yeah. I mean, it's looking like it, but there's I just don't want to underestimate, the lengths that institutions will go through
Save their
to
asses.
preserve, yeah, just to save their own asses for another fucking OPEX.
Yeah.
But if we get big downside into Friday, we're gonna see some ridiculous shit. Yeah, it's gonna be ridiculous because October is a uh very stacked expiry, and so there's a lot on the line. Um, Even though it's not like really a quad witching or anything, it's just like just in terms of options, it's looking like there's gonna be that's why I think there's gonna be a fight too, is because there's so much riding on this one expiry.
Yeah. Yeah, there is. It's actually going to be really important. I wonder what the size of it's going to be when they calculate on like Wednesday or Thursday this week. It's going to be one of the largest monthly expirations, I think, just because of the sold puts, if nothing else.
Yeah, it's gonna be pretty formidable. Um, I'm excited. I
Yeah,
definitely want to see it, but I think we're gonna see VIX stay high and just kind of fucking make big candles all over the place.
probably. Yeah. More fighting back against future sellers, and what I'm really curious about this week, I know this is a bit different, but is what happens with the Mag 7. If we're
Yeah,
gonna
yeah,
start to see
yeah.
actual selling in the Mag 7, this shit's gonna collapse a lot faster. And Nvidia on Friday did not look good.
The Mag 7 on Friday looked terrible. They got fucking slaughtered.
Yeah,
Like everything in the Mag 7 was down at least 1.5%, right? Something like that.
Nvidia lost
Tesla
three
was,
3% on Friday.
yeah, everything was awful. So like yeah, it's the thing is like,
Oh look, it's what's his
it,
face's fucking diamond top.
like anecdotally, you know, you you see this sort of behavior from tech when you're about to get a big downswing in the market, right?
Yeah,
So you could see it. You could definitely see it. But I'm not going to hold my breath just because once again, I don't want to underestimate the pushback we're going to get. It's going to be violent because yeah, there's just so much riding on the line for this, and
what I could see happening
it
is we get like big upside moves, but they collapse very quickly.
yeah,
Which is
exactly. That's right.
kind of what we
Yeah,
saw last week, but I think it's just gonna get worse. So when I warned all you guys like a couple weeks ago that we're gonna start seeing like big swings, and these can happen intraday. These like percentage wise can get they can get they can get really crazy. I mean, like 150 up, 150 down in the same day, and then closing like 75 up. Like as VIX climbs, this is going to become more and more normal. So be prepared for that to some degree. Um, Remember when you're up on stuff, take profits, reposition, hedge. Um, Even if you're hedging far out of the money, you've got the volatility that makes that feasible. So take advantage of it.
yeah, like it really with something with this much volatility, like you really want to just be happy when you pick the right direction, right? And but also be very prepared to, also pick the wrong direction. Like I wouldn't like I'm probably not going to open anything, you know, anywhere close to open. Like I'm just going to wait until a direction is picked and then decide whether or not I want to try to, play a reversal or not. And but the cool thing about this is your confirmations are going to come really quickly and very strongly,
Yeah.
you know.
Yeah.
Like that's going to be kind of nice, and that's why like high
Also,
vol
when you're
is like,
right, you're going to be right big.
yeah, so like high vol is like a like Gurk, Gurk gets, feelings in his nethers about high vol, and this is why is because your confirmations are just, they can be ridiculously strong, but I mean, you really gotta wait for those confirmations. And you're gonna be overpaying for risk. Like it's just the price that you're paying, right? You're overpaying for theta, you're overpaying for vol, but it doesn't matter in a lot of ways, right? So it's just the risk you have to take. And but like I'm gonna be super duper risk averse at open because you just don't know which way it's gonna go, and then wait for a side to play out. Not chase it open because opening volumes are so high.
Yeah, follow
Uh,
trends. I think sums up what you're saying is
oh yeah, yeah,
find and identify a strong trend and stick with it, and then keep your risk tight because you paid too much for it.
yeah. You're gonna pay too much for it, way too much for it. So, but yeah, it's gonna be an exciting week.
Yeah, I'm stoked.
I think that T+2 from OPEX is going to be more exciting, but we'll see how this week shakes out. And if we close with a bunch of those, sold puts in the money, it's going to be exciting.
Yeah, it is.
If we close below like 41.50, it's going to be
Jesus
really
Christ.
exciting.
Okay, that's excessive. I'm not prepared for that yet.
That's called capitulation, Girk, because if that happens, yeah.
I mean, they're not going to let their sold puts fall that far into the money without just closing them, right?
Exactly.
Yeah.
That's exactly what I'm saying. But then we get the JPM long puts right there. Whew.
How tight for risk? Like 15% on 0DTE. The problem with 0DTE is that unless they're in the money, their price is going to fluctuate wildly. And the higher vol is, the more it's going to fluctuate. So, I mean, with 0DTEs, you probably want to start with like a wide stop in this kind of vol environment. Like, you have to be willing to take on probably about 20% risk right off the bat. But then you can tighten that risk up if you're correct, right? So if you're wrong, you're going to take a 20% hit on the position. But if you're right, you should be able to very quickly tighten your risk up. And once you can start tightening your risk up, then you're gonna start to be profitable on it.
Depending on how far away your strikes are from the money, like if you're further out from the money, like 3-4 strikes, your
You
contract
get
is
burned
gonna
really
fluctuate a
fast.
lot.
Yeah.
You're gonna see a big green candle with your call, and then like just there's gonna be the tiniest wick on the top, and your contract's gonna be back to the same price it was. Like shit like that's gonna happen.
Out of the money 0DTEs become. I mean, they're starting like they're already like you almost have to take like 50% risk on them for you to realize them. But in this environment, I mean, they may just be like 100% risk.
Yeah, you practically can't really if you when you set a stop on an out of the money contract, you have to just assume it's gonna get filled.
Yeah, but like at the same time, the chances of that contract 100%ing or 200%ing or 500%ing are
Even going in money.
way higher. Yeah.
Yeah, so it's a super risky environment. So like
Everything
really,
very high
really
risk, very
careful.
high reward potential. Which
Exactly.
means that you need to focus on allocation and not directionally take positions that are too much of your portfolio, as the pickle jars frequently want to do.
Yeah, for sure.
So
It's a
allocation becomes key here because stops are less reliable.
exactly. Yeah, I mean,
Also,
yeah,
straddles and strangles are gonna get awesome.
yeah, they can. Especially if we get, big closing moves, right? Like where open to close is a big move. Like you'll love the straddles.
Yeah,
And then
even if you suck at managing them, once we start to pick up a lot of realized volatility, especially if it's directional, whew. having one side of your straddle go 300 bps in the money is fine.
oh yeah.
Yeah.
Oh yeah.
You won't care about the side that lost.
It's paid for. If
Yeah.
you pay for the side that lost, I mean, you could just leave it as a runner, for the reversal, or you could close it. But you're at that point, it's house money, right? So you don't care. So I'm excited. I'm excited for this week. I don't necessarily think we're going to get any directional information out of it, but that's just because I'm being conservative.
Yeah, that's
We
fair.
could,
We
and
could,
if we
yeah.
do,
JFresh might be right.
JFresh
Again,
might be right.
JFresh might
That's
win
crazy.
2 weeks in a row. What do we do then?
Jesus.
Do we just kick him out of the quant group?
I was thinking I
I
could
don't think
just
my ego
report him
can
as
take the
HOA.
blow.
I
Huh?
was gonna call it HOA and tell him about the Scrabble board game he still has.
Oh, okay. Smart. Yeah. The one that he borrowed from the community center?
Yeah, he still hasn't given that back, by the way.
Yeah. Okay. All right. So
So
blackmail and sabotage.
exactly, yeah.
I like the way you
Scary.
think.
We don't. No one thinks that we like kicked him out. He just left on his own accord. That's what we do.
Also, in the next month and a half, I guess we should say a little bit of something about this. We're kind of building something maybe for you guys. We're not really sure yet. I'll leave it at that, but we'll have updates on that maybe in the next few weeks as our kind of well, as we put more things together and formulate more of a plan for what we want to do. But we're building out a little bit of something on the data side for you guys at large, mostly in order to reduce the amount of work we have to do. So yeah, we'll have some discussions about that. It's still very much in its infancy, but
Yeah, you goddamn shill.
yeah, I know.
It's okay.
I had to say something about it eventually, right?
Yeah, I mean, really, like
And
the thing
you
is,
already opened your mouth.
I did, but it was to like 5 people.
Yeah, but they told
So
everybody, right?
well, it's just the with what we're like the thing we're doing is just expensive, right? That's the biggest problem with it. Like, so be nice to make it less expensive.
Yeah. Well, to everyone's benefit. So
Exactly.
we'll see
Yeah.
how that goes. But no, not a fully managed pickle fund. Fuck off. Um,
Damn.
I dropped a hint in the DD over the week. Did I? Well, I mean, I do like more sleep. I don't like sleep, but I like more sleep than I'm getting, which is fucking none. So no, well, maybe. That's
Sleep is
nothing.
good.
Do you need more pigeon whales? No. We just, we think there's at least a decent chunk of our data that we can share, more publicly, that we're not, actively using for building out like other stuff. So and it's kind of stuff we share with you guys already, but you'd be able to use it yourselves. So um we're working on it. We still got a lot of decisions to make and how we want to do it, but
Well, Gurky, I'm pretty sure this conversation started with you asking the question, how the fuck can I get people to stop bothering me about these goddamn pieces of data I keep talking about? So
yeah.
maybe that's the goal. I don't know.
Create a quant YOLO account that you share to pay for the costs.
That's a terrible idea.
Yeah. Me and Dork will blow that shit up in a week.
I mean, yeah, we're already trying with your WeBull account.
Yeah. We're getting close. We almost blew it up again this week. I'm gonna have to get it back to 10 grand.
God damn it, Dirk.
I can't
swear to
I
God.
can't trade like when we get big moves like that, I can't fucking trade the goddamn Weeble account and my ports at the same time, right? Like
Yeah,
I've
you're
got like
managing.
similar positioning but 10 times the leverage. And when it comes to choosing where I'm going to place a stop in the next 5 seconds, my account's going to win out every time.
Yeah, I know.
I'll just do more conservative shit on it and just grow it slow instead of trying to make it big fast. And then everyone will be happy.
Not the pores. They're going to be really upset that your Weeble account isn't exploding.
Probably, but who cares?
That's okay.
I mean, I'm surprised I haven't blown it up yet. The success rate for like $5,000 accounts is like less than 20%, right? So the fact that it's still alive is I'm pretty happy with. I just wish I
Yeah.
stopped blowing it up every time I get it to 10 grand.
Yeah, I think what happens is you do the same thing that I would do if I got an account to 10 grand, which is scale.
Yeah.
And then,
Well, you have
yeah.
to. I mean, you have to scale a little bit.
Yeah, I mean, well, but like, do you though? I mean, like, if you can get it to like 15, the amount of safe positioning you can take just is way better than you can at 10.
Fair. All right. Well, I'll look at it. I'll have a hard think. Maybe I'm approaching it wrong with PDT. I've only gotten fucked over by PDT. If I could just close my goddamn spreads after I open them, I'd be fine.
Yeah, so like that, what makes sense to me is just going like, super conservative and, limited risk until you hit fucking, what is it, 25 grand and then, or
Yeah.
30 grand, a little bit of padding, and then you just fucking, then you can go nuts.
It's so boring. Just deposit
It is super
25
boring, but
grand.
it's painful, but like you gotta get the root canal for the,
Yeah, no. But I already
you know,
did this shit, years ago. I don't want to grind my way up again.
I
All
know,
right, all
but
right. I'll be more risk averse. I'll instead of aiming for like 2,500 a day, I'll do like 500 a day.
okay, cool. You're being smart now. Instead of going for 25% daily gains, you're looking for only 5% daily gains. I love it.
All right. Thank you guys so much for tuning in. I'll have Pickles picks out tonight. Dork, thanks for coming on, man, as always.
Thanks for having me.
And if you guys have any questions you didn't get to ask me on the stream, hit me up on the Discord. I'll probably be around for the rest of the day. See you guys later. Peace.